that our guest Simon Ho, head of financials research at Citi, has also split banking geographies into healthier and perhaps a list that needs to go for a full body checkup at some point with the doctor. Indonesia, Simon, Thailand, Pakistan, outside the China sphere, come across as well capitalized and really feeling a little spillover from the Basel III regulatory framework. But Taiwan, Malaysia, having a little problem there. Can you tell me, let's deal with the problem children first and take up the case of Taiwan.
Sure. Both Taiwan and Malaysia, as you mentioned, appear on our Basel III screening analysis as not very well positioned, more problematic markets. Both of these markets actually have relatively low equity tier 1 ratios if you throw in the Basel III deductions and calculations. Some of those markets and banks started off with low ratios to begin with, so it may not be a Basel III specific problem, but net-net, they end up at at the bottom of the pack in terms of capitalization. Taiwan in particular has had, I think, two other problems. One is their NPL history has been pretty poor and patchy in the last 10 years. They've had this credit card crisis, they've had this corporate NPL issues. So one of the aspects of Basel III is actually changing the way banks make provisions. Instead of using provision as you go when there's any losses, we want to move to through the cycle provisioning, so smoothing it out through the cycle. And if you do that, Taiwan may get hit on that measure relatively more than the other banks in the region. In addition, their profitability is one of the lowest in the Asian banking space, so any little change in provisioning has an outsized impact on their earnings. Yep.
For these markets where they sport a potential looming deficit in terms of T1, are those the markets we need to be watching for some pretty substantial cash calls in the months to come? Is that where a lot of the money raising action is going to be to replenish that?
I think we've got to differentiate sort of the short term and the medium to longer term. A lot of this Basel III stuff it's coming out right now. I mean, we're going through a consultation period. The standards haven't been finalized yet. Implementation is not until 2012. So, and how the regulators interpret and implement is still unknown. So I think these are, for us, things to track, sort of alert signals. It may not necessarily mean these banks want to come out this early, but there may be some risk down the road.
And some of the names land on the sell list as a result of this, like China Trust Financial, for instance, Changhua Bank would be a couple of two out of the Taiwan perspective.
That's correct.
And what about Southeast Asia? Let's veer over to Malaysia. A little bit of a blurb on Malaysia, where we note that the public bank is your least preferred bank, also for a lot of the same reasons, low equity T1.
Yes. Malaysian banks have an issue in that the equity ratios are not very strong. Some of the banks have actually made acquisitions in the region or domestically, and they funded that with hybrid capital, so not equity. And the accounting in Malaysia allows some of this goodwill to be actually hidden up at the financial holding company level, away from the bank level. So it's actually away from the eyes of the regulators right now. It is unclear how the new standards will affect them, but if I look fundamentally, these banks are actually much more leveraged than a lot of the Asian banks. Okay,
Len, finally, to end our nice conversation today, Simon, let me start at the beginning. Is there going to be a full-blown banking crisis in any geography in Asia this year, or is that not even on the menu?
Not that I can see.
Not even on the menu?
Not that I can see.
So situational cases, we'll have maybe some capital structures that need a little bit of revisiting, but that's about it.
Asian banks are generally well capitalized, very liquid compared to our counterparts in the West.
Okay, that's right. And when you're working in economies where you need 30–40% down on a piece of real estate, that is prudence, America, prudence. Simon, thank you very much for stopping by. Simon Ho from Citi.